Good afternoon. Welcome to the forum today. Today, this is one that I have looked forward to more than any other. And this is my son. And he's a banker at Wells Fargo. And senior vice president. At the time, and he wouldn't tell you this, but I can tell you that at the time he was made senior vice president, he was the youngest senior vice president in Wells Fargo. As you can see, I'm proud of my son. He's done very well and continues to do well. He's a member of the Chamber of Commerce, in addition to handling a very large loan portfolio for Wells. He's able to do here in Salt Lake, although I think some of the people at Wells would like to move him to San Francisco, but he's able to stay here. And a lot of that has to do with the nature of some of his accounts. But his mom and I are grateful for the opportunity that we have to share his life and the grandkids, and so it makes it very nice for us. And I think another thing that I would tell you that he probably wouldn't is that he was awarded recently what they call the Golden Spoke Award, which is for high loan production, which allows him to go to Coronado Island and spend some time with his wife. And so I can do the bragging because he won't. But he's going to talk to you about the large size loans and what happens in the big departments of a large national bank. We talked about community bank earlier, and now we're going to talk about a nationwide bank. And so without any further introduction, I want to turn the time over to my son, Rich Lambert. Welcome, Rich.
Thanks, Dad. Thanks, Dad. Obviously, proud dads are almost at a disadvantage when they introduce somebody. So thank you. But it's obviously the love is mutual. So you can't find a better grandpa and a better dad. As my dad mentioned, I am a commercial corporate banker at Wells Fargo Bank in what's called the Regional Commercial Banking Office of Salt Lake. So the market that we cover is essentially the Utah market in western Wyoming. We have offices that do what I do all throughout the country, and we can talk a little bit more about that. I've got some slides that discuss a little bit about the institution I work for. So kind of give you guys some scale and size of what we do. But by show of hands, does anybody know what a commercial or corporate banker does? I mean, 1, 2, 3, maybe. Anybody want to give a stab at what they think it might be? Yeah, go ahead, Joy.
I think you service corporations and commercial businesses and help them to get money, make sure their checking accounts and everything are where they need to be. Perfect.
That's exactly right. So we'll talk a little bit more about what I do in more detail, but in broad terms, we handle large businesses. So businesses in my world typically are their annual sales are over 20 million. That would be at the small end, upwards of $10 billion in annual sales. So a lot of the clients that I work with are large publics. They're smaller publics. They might be large privately held businesses. They have a number of complexities and needs. And so they're typically with a larger institution to meet those needs. But we can talk a little bit about a couple things here. Here's kind of an overview I wanted to cover today. We may or may not get through this, but at least it was some framework for discussion. But essentially, we're going to talk a little bit about what a corporate banker does, the qualifications and careers and benefits of the profession, the financial services landscape. It sounds like you had spoken or had somebody speak to you about the community bank. Is that right? Okay, so this might fill in some gaps on some of the larger institution information. A little bit about the credit process and maybe what it entails, which I think might be insightful. I don't know if we'll have time to get to that. I'll give you a little fill on Wells Fargo and Company. Wells Fargo was founded in 1852. by two folks with the last name Wells and Fargo, and they combined them. And it was essentially, as you guys know, it was a stagecoach company that ran money back and forth across the coast from the Gold State in the Bay Area of California. It was the first national network of banks. After the Glass-Steagall Act, when the banking institution as a whole was reformatted, it had to be compressed into a single state bank, and so it chose to stay in California. It wasn't until the early 90s that some of those restrictions became released and banks started to go back outside of state borders into more regional borders, and then obviously now back into national and international borders. So there's been a lot of change in the last 30 years in the banking industry, but where Wells fits in this now is there's a couple little slides that I'd like to share, and these are more brag slides for the institution. I'm actually pretty proud to work here. It's been a good career for me. But Wells Fargo at the current time is the #1 market cap business in the world outside of the two Chinese banks that really nobody quite knows what the value is there. So there's kind of an asterisk there. We sometimes call ourselves the 3rd largest or the 1st largest of the ones that you actually trust the information on. So that one's a little hard because the currency's pegged to its own system. But by way of market cap, does everybody know what a market cap is? Anybody want to take a shot at that? A market cap is essentially the total value of the stock of that business. These are all publicly traded banks across the world, and if you took all of the value of the stock, added it up at the time that the market places the value to that, we sit right now at $255 billion of market cap. So I own a speck of dust share of that. But I will say that one of the interesting facts about Wells Fargo stock is that it's actually Warren Buffett's. You guys know who Warren Buffett is? Okay, everybody should know who Warren Buffett is. It is his largest stock holding. So his 2nd largest is Coca-Cola, his 1st largest is Wells Fargo, and then he kind of runs down the list. He's obviously invested in tons of businesses, but he actually invests currently about $23 billion into Wells Fargo. So we're actually pretty happy about that because he's a pretty savvy conservative investor, and it speaks well to what I believe to be the fundamentals of the organization, which sometimes don't get discussed, particularly in the light of the financial services industry and some of the challenges that the industry's faced. A couple of things that we could point out: we have the largest store network in the U.S., about 9,000 stores, 12,000 ATMs. We're the fastest growing investment bank on Wall Street. That's probably enough there. A couple of other things. By asset size, which is essentially the loan portfolio of a firm, is $1.5 trillion. That's 4th across the U.S. banks. So it's interesting that we're 4th in asset size, but 1st in market cap. So I think the market really sees the value of what we do, and there's a few unique factors to what we do. Mentioned it's 1st in stock value. Let's see, team members, 270,000 team members. It's a lot of W-2s at the end of a year. And that's a lot of people. So, we can talk a little bit about why that's interesting, but, the quick snapshot is, you get in with a big firm like this, there's a whole career of different careers within an institution. So it gives you flexibility if you're willing to try new things within a large firm like this. We have 70 million customers. That's interesting because 1 out of every 3 households in America banks with Wells Fargo in some form, whether it's a mortgage, car loan, whatever it might be. I think that's pretty crazy, especially since you have what we like to call a very diverse financial services landscape. There's a lot of players, a lot of banks, a lot of credit unions. That's kind of an interesting statistic. Let's see. Here's where we cover by location. In 2009, we merged with Wachovia and essentially took everything here with Wachovia. They were an East Coast bank. We were west of the Mississippi with some essentially business operations in the East Coast and investment bank. Now we have, that's where we get our platform, about 9,000 stores. There's, you see the Midwest is a little bit thin. What that is, those are Wells Fargo Advisor and Wells Fargo Home Mortgage offices, so those aren't branches and retail stores. On a global basis, we have operations and offices in Asia, Europe, you've got South America, Canada. I think our strongest suit would be in Hong Kong, the UK, and Canada is where we're probably the most prominent. And we work with banks and on a correspondent banking relationship for all of my clients that have international needs. On to the good stuff. What do I do? Well, what I do in my role is I manage about 15 to 25 different commercial banking clients. Particularly, I specifically manage 16. Okay, I have about $800 million worth of loan commitments in that portfolio, and so I've financed a various number of different means for these businesses to do what they do. They may be for acquisitions. They may buy another business. They may be to build a building. They may be to build a new product line and get fixed assets in the form of equipment. It may be to fund working capital with lines of credit to fund purchasing inventory to then sell to their clients. It may be to handle payables strategy where we go through and put in place a credit card, which I think you should call it a credit card on steroids, where people will actually go through and use the credit card in the business form to be able to capture the month of float, but then we download all of the information reporting and throw it right into their accounting system and tie it up so that they don't have to actually enter anything into their accounting processing. A lot of technology in this stuff, a lot of interface, we try to get embedded into the client's operations all the way from the loan side to the treasury side to the insurance side to, you name it, because we realize that that's good business for us in the long run. It can be profitable, it makes them loyal if we're bringing solutions that make sense. So we have a lot of those types of products. We can talk a little bit more about that. But the annual earnings of my portfolio to the bank is about $12 to $15 million a year. So out of those 15, 16 clients, they make about 12 to 15 million to the bottom line of the bank. There aren't many businesses that can do that, really, with that few clients. It kind of speaks to the broad arrangement of products and services that we can provide. We have regular contact with clients. In fact, I probably speak with a lot of my clients almost daily with things. I don't know how often you guys have talked to your banker. Probably once a year, and that's when it's not the ATM or your online banking, right? I mean, something went wrong and you needed to talk to somebody. I talk to my clients pretty much every day. I mean, there's just so much going on with these clients. They're large clients, as I mentioned. My typical range is between 200 million to 5 billion in annual sales, but they may be as small as 20 million. They're all typically headquartered in Utah. They have a multi-state and international presence typically. They may be headquartered here, or they may be the regional headquarters for a foreign operation. I've got two of my clients. One is headquartered in Hong Kong, the other is headquartered in Sydney, Australia. Their North American operations are all headquartered here. So we manage all the business for North America here out of our office. They may be public, they may be private companies, they may be internationally traded companies, one in Hong Kong on the stock exchange, another in two on the Australian stock exchange. These guys have all been in business for several years. They didn't just get started yesterday. I don't fund startups. Anything that has less than 3 years of history, I'm not typically looking at. They're just usually not big enough at this point. As I mentioned, they've got significant global operations, and we team up with our global banking partners. Smaller companies are typically handled out of our business banking group. And so, the small business, and these can be big businesses. A lot of you guys will be employed by these businesses over time, but 20 million in sales and below is handled out of our community bank and our business banking group. So that's kind of what my client portfolio looks like, and everybody's portfolio is going to look different in my world. They may be, varying phases of size, but I manage and I underwrite risk. So when I have a deal that comes on my desk, I get a request. I've got a company that says, "Hey, listen, Rich, I've got this opportunity to buy this product line from Pfizer. And it covers all the operations in the East Coast that lacks the territory that I currently cover. They want to sell this thing for $75 million. What can we do? So we'll sit down and talk about that. And we'll say, okay, what are the ways we can finance this within your existing capital structure? Can I do this with bank debt? Can I do this with what's called mezzanine debt, which I might have to bring that has essentially a subordinated component to bank debt? And there's a pecking order for financing, and not a finance class today, but I think it's important to know that bank debt's the cheapest and probably the most flexible, but may not be the most long-term. You've got mezzanine debt, which may be something that can fill in between equity and debt, and then you've got equity. And equity is the most expensive. You don't have to pay for it. It's been somebody investing in your business in exchange for ownership. But what happens is you make $1 and now you got to give up 50 cents of that if they own 50% of your business. So that's where it becomes more expensive. And so we typically, we can arrange all those types, and we'll talk a little bit about that. But I think when I look at underwriting the financing, I might have to use all of those tools in order to get a deal done. And I've got partners within the bank and the debt capital markets, in the equity market side of the business, that I can use to help with that. We structure the deals. They're highly customized. When you come in for a loan with me, it's not one size fits all. No two deals look alike. The credit agreements on these things will typically be upwards of 180 pages of fine legal print. They'll have covenants, they'll have repayment terms, they'll have restrictions, they'll have all kinds of things. And that's how we structure a deal. And hopefully it works, the economics work, they can pay me back. I'm not an investor, I want to get paid back. And so when we give that money, we then become essentially their largest investor in their business. We may not have ownership, but we have the largest amount of capital in their business. And so now, we got to partner up. We got to talk a lot. We got to make sure that we're on the same page. When they have bad news that comes along, by gosh, they better tell me they got bad news. And I want to know that. And that's okay if it's bad news. I mean, they don't control the world. I just need to know so that then I can go through and I can evaluate how I risk rate that company. And I manage risk ratings. I risk rate everybody. And that's going to be a fluid motion of risk rating with every bit of information I get from this client. So long as I get my risk ratings right, the regulators and the examiners give me a pass. If something goes wrong and we lose money as an institution, but I've made sure I risk rate my ratings right, I'm okay. I mean, I can't control what the company does. I just need to make sure everybody's aware of the current financial state and the risk rating for that business. So I report on trends and changes in the market and the industry that might affect our clients. I mean, I get an article in the Wall Street Journal that says, all people that are buying plastic products will not be able to get plastic for the next 6 months because of some polyurethane shortage. I mean, typically we'd know about that before it hits the Wall Street Journal, but say I'm dealing with a company that manufactures and needs plastic for 80% of its products, that's a big deal. That's going to cause them to have supply shortages, and their clients aren't going to be able to buy anything, which means they don't sell anything. Those are things that I'm reporting and I'm giving back to the bank all the time. So why do I need to be so on top of this part of my job? Well, an interesting statistic. In lending, banks actually need to be right about 98.5% of the time in order to make money. Any of you guys have that type of error threshold in your job? Anybody ever flip burgers? Nobody's flipped burgers? Jeez, you guys. You have? Okay. Did you ever get a burger wrong? Yeah, how many times? Maybe 1 out of 10? Maybe you got good, you get 1 out of 20, 1 out of 30 even, all right? Okay, that would lose money in our world. 1 out of 30 would lose money. I mean, essentially 2 out of 100 would lose money, and that's what it comes down to. So we can't be wrong. What happens if you do a deal, it goes bad, we write off the loan, you essentially wipe out all the earnings and interest, which is typically interest on a loan right now is nothing. You wipe out the earnings for thousands of clients with one deal. So banks have to be capitalized, banks have to have their own equity, they have to have money to be able to handle that, because we use your money to do this. We use people's deposits. mean, you guys don't want us to be wrong, right? Right? So the stronger the credit culture within the bank, the more we can sustain downturns, the better we are with making sure we mitigate losses, and the less we're going to lose in the long run, which means we're going to survive. I mean, that's at the end of the day, that's what happened in 2008. People exceeded this percentage. You know, I could spend a whole 2 days talking about that. But that's essentially what happened. There are institutions out there that don't have a stringent credit culture. Doesn't mean that we don't lend. We lend all the time. We just need to find people to pay us back. And you know, if a bank doesn't give you a loan for whatever reason, you know, you have to recognize the fact that they are playing with people's money. They're playing with depositors' money, and they're federally regulated, and they have to be rated 98.5% of the time. So you can't take it personally if you go to get a loan and they don't approve you. Sometimes there's some factors there that play into that decision. Okay, and as I mentioned, strong banks have a strong credit culture. Okay, so the next area is I provide solutions and I drive revenue. So while I'm out there making sure our clients, you know, we're managing the risk, I'm also trying to figure out ways to add value to their business and also to my bottom line. And I work with 36 different business lines in my world. And you know, these can include investment banking, so equity, M&A, debt capital markets, private banking for the business owners. They may qualify where they've got large amounts of money and they want to be able to invest it or have it managed. The global banking group, so as I've got clients that do operations in Asia, in the UK, whatever it might be, I'm setting them up with solutions that would be tied to an international group. Treasury Management, somebody mentioned, Joe I think mentioned checking accounts. I mean, these are checking accounts. These are just checking accounts on steroids. I mean, you've got all kinds of information reporting, interfacing with their accounting system and so on and so forth. Liquidity Management, a lot of companies that I work with have a lot of cash. If they're not borrowing, they've got usually a lot of cash. They want to do something with it that's going to create a return. Trade services, so they do everything to finance the trade. So they're buying from China. They're turning it into, you know, goods that they're going to sell into Europe. You know, there's a lot of process to make sure that they can obtain those goods from China and sell them and get collected on those funds in Europe. I've got specialty lending groups. I've got asset-based lending, factoring, supply chain finance, commercial real estate, equipment finance, restaurant finance. I mean, I've got all kinds of specialty groups I have to work with. Depending on the need, I may pull them in. Merchant services, so processing credit cards. You guys, who's the last person to write a check in this room? I don't think I've written a check in years. You were? You still got a check?
Yeah, me too.
Yeah, there's like one or two areas where people still need a check, right? Yeah, so it's funny. Yeah. So everybody's going to credit cards or something else, and the merchant card or merchant services is the capturing of that payment at the point of sale. Hedging, rate risk management, swaps. We typically go to the market and buy swaps and derivatives to be able to fix risk. 401k, health savings accounts, insurance. There's a few. I mean, there's actually a lot more. These are some of the broader groups that we work with. And then lastly, I'm involved in networking and community involvement. I mean, this is essentially how we get the message out of doing what we do and ways that we make introductions to people. So we're on boards, alumni associations, nonprofits, involved in business associations like the Salt Lake Chamber, ACG, Mountain West Capital Network, and Go Ahead. And I would encourage you guys, as you guys get into your careers, really to try to look at those organizations and try to join them. It's a great networking opportunity to find a job, frankly. And, you know, particularly some of these like the Chamber, well, every business in the state of Utah that's got relative size and complexity is tied into the Chamber, because that's the business association that drives policies with the legislature. So, you know, there isn't a legislator up on the Hill that doesn't make a policy without asking the opinion of the Chamber. You know, because it's a pro-business state. A lot of the people in the legislature want to make sure that they're doing it with the business community, because the business community creates jobs. Jobs then turn around and create taxpayers, Taxpayers then turn around and create tax revenue. Tax revenue then, hopefully it doesn't get too spent, but, is invested in infrastructure. So it's important. It's an important part of what we do. Okay, I kind of mentioned earlier about some of the types of ways to capitalize a business. If you're going to go shorter term, it's going to be a lower cost typically. Now we've had periods where this has all been backwards through this downturn. But, a few options would be an asset-based loan, a commercial loan, commercial paper if you're a public company. Longer-term debt might be a commercial loan, private placement, or an asset securitization. I'm not going to go into these, but these are the instruments that would be tied to this. Then you go to equity. This is more for higher cost and longer term. You've got mezzanine, private placement, and then high-yield debt. And then on top, you've got self-financing. So you bring your money, you pull the money out of your mattress, and you throw it into your business. That's equity. You might get somebody else involved who might be an angel investor. Then you might pull in a venture capital or private equity business, and then there's always going and raising public equity on the stock market. So we help with everything from here down. We have, these are some types of debt that might be it's more of a grid on what some of these debt structures might look like. A revolver would be a line of credit, term debt, asset-based lending, equipment finance, or real estate finance. These are pretty generic. You might get a revolver that would last up to 3 years and then we renew it. Term debt might be up to 5 years, even 7 years. Asset-based lending, up to 5 years. Equipment finance, depending on the life of the equipment, 3 to 9. And real estate would be 3 to 7, but your amortization would actually be 15 to 25 years. So when I buy a building, or somebody buys a building, they use me to finance it. I don't go 25 years or 30 years like your mortgage would. I go 5 years, maybe 7 years, and then we look and see what the market's doing, and then we redo the deal at 5 years. It's a lot to digest. I wouldn't hold you to even reading any of that stuff. You're going to write the test, right? So you want the answers? I can give you the. Oh yeah, go ahead.
Oh, I just have a question. So, because you do a lot of maintaining your customers that you currently have,
Mm-hmm.
so do you guys look for sales or as far as referrals from the banking centers? Is that where you get most of your clients, or do they come to you directly? Do you have a sales team?
Very good question. So let me kind of go back to this. This networking and community involvement, frankly, is probably my best bang for my buck. So, think of it like this. Businesses looking to relocate to Utah. Well, by the time they're looking at coming into Utah, typically the Governor's Office of Economic Development is probably already tied into these guys. Maybe some of the directors that are tied into the chamber have already talked to these guys. And they're saying, hey, and in fact, I just had this conversation. A guy, anybody a cyclist here? A little bit?
Beginner.
Oh yeah? Road bike or mountain? Both? Okay. You ever heard of Mercury Cycling?
No.
They make high-end carbon fiber rims. Okay, they're based out of Mississippi. I got a call from the governor. I got a call from the Governor's Office of Economic Development, and said, hey, this guy and his wife are looking to relocate their business to Utah. They've settled in and they think Ogden's the right place. There's an abundance of carbon fiber products in the state. They also love to be outside, and Mississippi's the pits to be outside in about 3/4 of the year. And so they really want to relocate here, and we're trying to get them in touch with people that can help them make that transition. And so they called me, and we sat down with a bank group and said, okay, when they were in town, we met with them and said, okay, here's some of the things that we can do. Let's talk a little bit more about your details. Do you need a CPA firm? Do you need a legal counsel? This is all part of the associations and networking that we've built over time. So now Mercury Cycling is in process of moving to Utah. Well, the good news is we get to help them with the banking.
Nice.
Now I have a business development officer in my office who is cold calling.
Yeah, that's what I wondered if you had somebody else.
Yep.
Obviously, you can do that.
Yeah, it's exactly it. I don't have time with my portfolio, but as soon as he gets a warm vibe from somebody, then he says, okay, I got to bring Rich in and we can start talking turkey. So yeah, good question. And then I've got a team underneath me, and we'll go through that in just a second, of people that support what I do too. As I get more support, I can do more of this, which can be pretty productive. And that's where the bank likes to see me, frankly. They like to see me doing more of this and less of this at a certain point, because I know this. You know, I mean, I've been doing this for 20 years. So I know my clients, I know risk, I understand how to underwrite. I don't have to prove to anybody I can do this. What I need to do is go out and drive revenue. Okay, so now we're going to get into a little bit of the careers. So what does it take to be a banker? Well, I think you got to be crazy stupid to start. And, you know, no, I'm just teasing, I love it. I think everybody says that about their career at one point or another. But the skills you need, frankly, are people skills and the ability to interact. It's interesting. This is a career, and I think the hardest thing that the bank has, the hardest time they have filling this role, is to get people that are both analytical and that are people. Okay, isn't that hard? I mean, you know, you get number crunchers and people that are incredibly bright, and you know, we've got. I mean, I went to school. It's funny. I went to school with a number of guys that were the smartest people I know. And it's funny to see their career paths. And they've had great careers. They've just had very different careers. But it's interesting to see how maybe some of the people skills limited their ability to be able to advance within their organizations. So the hard part we have is finding people that have people skills and analytical skills. So some of the skills, you know, we write. We obviously write a lot. It's probably our major method of communication. Computer skills, obviously, I mean, everybody's on computers, that's pretty much a given. Accounting and finance, and to some degree, economics. You wouldn't get hired into our office without a degree in accounting or finance. So your education requirements, as I mentioned, are an accounting degree or finance. MBA or MPA. MPA is Masters in Professional Accounting, or better, frankly. I mean, maybe experience that could offset that. And then a summer internship if you can find the opportunity for somebody to hire you in that capacity. Any questions on that?
Rich,
yeah.
Against my better advice, you went into banking. How did you start? And you were 18 and started in banking. Tell a little bit about that.
Yeah, I wasn't 18, but I felt like it. Yeah, I've been with the bank 20 years, and it's hard to believe that I'm starting to actually look old. But for a long time, people would ask me, "When did you start?" You know, but it was I started after. Let's see, I was a sophomore in college. I was attending the U, and I graduated in finance. I knew that I wanted to go into the financial services sector. And essentially what I did is I needed a part-time job. So I went to the bank and applied to be a teller. That was a great start. I can't say that anything that I learned in being a teller necessarily translates into what I do today. But what I do is I had connections with people that did other things, okay? And you know, you can never put enough value on doing a good job wherever you are. I don't care if you're, you know, mopping the floor. You know, if you do that well, and you guys have heard this, but if you do that well, opportunities will just come. It's weird. But I had an opportunity where I was graduating. I didn't have any intention of staying with the bank on the retail side. It just wasn't of interest to me. It's a great career. It wasn't what I wanted to do. And I had the opportunity for somebody who knew that I was applying for different financial analyst jobs across the country, came to me and said, it was my hiring manager, and said, "Hey, I heard about this position in Salt Lake," which is where I was, where they're hiring an analyst for the commercial banking group. I thought, well, okay. And Wells Fargo had just bought First Interstate Bank at the time. And it was kind of a new thing that First Interstate employees weren't used to. So I happened to be in the right place at the right time and applied for the job and was fortunate enough to get it. Well, that included the opportunity to go and learn about businesses, They taught me how to analyze. They taught me how to work with companies and understand what the company is doing right and wrong, and so that we could invest and lend with them. And then I went to credit training. It was about a 3 to 5 year process of bank-specific credit training. By the time, yeah, I moved to San Francisco, and then when I finished that program, had the opportunity to stay either in San Francisco or come back and take over my former boss's position as he was advanced. And I couldn't be too far away from the skiing and everything else. I'm not a big city guy, and so for me that was great. And I took that opportunity to come back, and I've been in that role ever since. So it's interesting how a part-time job in the branch, working in the drive-up window, we did get held up twice when I was there. That was awesome. It's amazing how much that actually contributed to what I do. So hopefully that helps. Any questions on that? There's all kinds of different ways in, by the way. I mean, we do a summer internship about every other year in our office. We've already hired out for this year. We typically go for an MBA student between their first and second year at either the U or BYU is where we'll typically recruit out of. We have gone elsewhere, and we've had guys that have taken their summers. They've been from University of Michigan, Wharton, a number of different pretty nice schools. But we typically like to stay to the local schools here in our office. That's a great way, and for us it's nice because then we get to kind of test drive these guys. I mean, we load them full of all kinds of stuff and see if they swim or sink. And the ones that swim, we probably invite them into a junior role as an analyst at some point. And then as an analyst, we just expect them to, we'll kind of get into this. Oh, go ahead.
Go back there with the people skills. Now this is kind of in order, isn't it? Priority order?
If I were to put it in order, I'd probably put people first, and then accounting second.
Okay.
But yeah.
And writing third?
Well, finance and accounting second, with writing third. Yeah.
Okay.
Economics would be last.
Does that give you any direction if you're interested in becoming a banker, or can that apply to any other area?
You're going to have to deal with people wherever you are, so.
It's so true. People don't realize that, and the more sour you are, you're just hurting yourself, It's interesting that you bring that up. Okay, so here's kind of the path. So credit or financial analyst, typically in this spot for about 3 to 4 years. You underwrite, you look at industry trends, special projects. The people skills aren't going to be necessarily as important here because we're not going to put you in front of clients at this point. We might bring you out to an event here or there, but I mean, you're not going to be working a deal. You're not going to be sitting in the boiler room with somebody on a deal that really requires. And when I say people skills, like tough people skills, like tough moment negotiating stuff, where everybody walks away feeling good at the end of the day, but you've just beaten each other up in the best way you can.
Right, sometimes though you think some of your customers are your coworkers too, because you're working for them. So
exactly. So
you got to get along with them.
well, that's where the people skills come in, because we're not moving into this
Right.
if we don't like you. So exactly, and we get to the idea is that we want you to become a banker from the beginning. I mean, there's people that might frankly stay in this position because this is a great role, well-paid role, very analytical, very complex, doing a lot of what I do, and that's kind of the degree. So you go from here into the credit training program. Large banks typically offer this, small banks won't. It's too expensive for them. They'll typically spend about $200,000 to $300,000 for your training in this process. So at this point, they're betting on you. And then it's essentially the equivalent of a degree or a master's in banking. There just isn't a business school out there that does this right. So large institutions do this themselves. Then you become a portfolio manager, possibly. Maybe an analyst upon return, moving into a portfolio manager. And here, typically you're going to be managing clients and talking with clients and working on the deals and solving problems and structuring and reporting through the credit side of the bank and the credit officers and dealing with inquiries and regulators and everything else. It's essentially a large portion of what I do is this. And this role helps me get out and market more. So the personal benefits, what do I like about it? What I really like is I like getting an intimate knowledge of several different businesses. I mean, at the end of the day, I probably just didn't know what I wanted to do. It's like, do I want to be a restaurateur, or do I want to, well, yeah, I like it all, it's cool. So I get to do all this with every business I deal with. I get to know every one of them. I get out and walk the land, I look at their inventory, I get to ride in the big Caterpillar machines, get to ski down the slopes. I mean, it's cool because you really get to know what these guys do from from the beginning point to the end point, because it all translates into their financial results. So I like that, and each day is different. I mean, I don't wake up, I've never done the same thing twice. I mean, I'm having the same day twice, I should say. I do a lot of things twice, but I never do the same thing in any given day twice. So I've got trusted advisors of business owners or executives. I get to sit in the boardroom with them. I get to talk about ideas and solutions. That's fun. Sometimes you get to know about things that come together long before the public does, which is kind of interesting, kind of a responsibility. Yeah.
Do you have businesses try to recruit out of the bank?
Yeah.
Is that something that's pretty normal and standard?
It's not as normal and standard because they kind of want you there. Because when they've got a good banker, that's their capital source, and they like to keep them there. But at the end of the day, if there's an opportunity for a vice president of finance job or a CFO role, you do see bankers go and take that. I've actually got one of my former bankers is the president of, you guys, anybody follow Bridal Design? Maggie Sotero Designs? Yeah, okay, so one of my counterparts left to go be the president of that company. And he's been running that for about 8 years, 10 years now. Another one, the Five Guys franchises. Anybody eat Five Guys burgers? Okay, not the one in Utah, that's owned by a different franchisee, but the guys that own all of the franchises in Canada, that's another counterpart of mine. So yeah, there's those opportunities that come on. Yeah, good question. It's analytical. I like networking. I like the complexity and the social interaction. I'm fairly fortunate. I actually get to bank a large number of ski resorts across the country. So that's a fun site visit. You get to go ski a little bit and talk with the folks and do something like that. I get to take clients to jazz games and do the schmoozing. It's fun. I don't like that part as much, surprisingly. It's time away from my family. It's usually it's different when you're sitting at an event for 4 hours with a client who you have a great deal of respect for, but you're on the clock. So you watch your P's and Q's, you try to manage the conversation in an appropriate way. If I were to go with a buddy and we were sitting, we'd make fun of people that eat peanuts weird. I mean, that's a different thing. But it's different when you're with a client. And so, it sounds weird, but that type of client entertaining can be taxing, particularly on a multi-day event. I mean, you kind of run out of stuff to talk about. The professional benefits, as I mentioned, there's 270,000 employees in the organization, so I got a whole life full of careers that you can choose from. And a lot of them are interchangeable. So if I get bored doing this one day, I might do something else. And my 401k and my benefits all stay the same, and that's appealing to me. The business opportunities, associations lead to outside opportunities, to your point. Maybe they need a new CFO. Maybe a client needs that, and they know that I can do something like that. And then the compensation and benefits, they can be significant. I mean, you make a good living. It's in line with an attorney or doctors and things like that. I mean, at the level you perform, you can get compensated for the level of performance. So, I like that. We can open it up. You can ask me about anything. I'm not going to tell you what compensation is, but.
Can we ask a few questions about him?
Yeah. What do you want to know about him?
So when you were young, did you steal a car? Nothing.
Yeah.
What's the difference between you guys and say, like a financial firm like Goldman Sachs or?
Okay. Yeah, very good question. So Goldman Sachs is an investment bank. Okay, we have an investment bank, but we are also a traditional commercial bank. So we have significant branch operations, significant retail operations. Retail would be for consumers. So, you guys open up your checking accounts, you get your credit cards, all that stuff. Goldman Sachs, doesn't have any of that stuff. Now, Goldman Sachs now has a banking charter because of all of the Glass-Steagall regulation changes that took place. They had to, frankly, in order to be able to take deposits and fund their business. But they are typically taking their revenue from transactions. So they do a big M&A deal, an IPO. They make $50 million. They go out and hunt the next one, and that's what they do. So we do that too. We just do it with a whole portfolio of clients. If you're asking me where I'd rather be, I'd much rather be at Wells. And it's interesting, the Wall Street firms all have their unique personality, and our investment bank kind of looks and smells like those guys. They're all, frankly, arrogant and, run around the place like they own it. But what they don't have at Goldman is that relationship with a guy like me and a business that might be going public or needing to raise funds or grab equity or high yield debt or bonds or whatever that can say, hey, listen, we've got this capability, let's do this. Goldman has to go out and forge that relationship outside of that opportunity. And that's harder.
So with everything that happened in 2008 and the marketing, so I banked with Wells Fargo for a long time, and there seemed to be a lot of personality shifts that happened within the bank after what happened with the market and all their bad press and like all these things that came out that a lot of banks were doing.
Yeah.
And they changed how they dealt with customers on a personal level. Was that something that occurred throughout the entire institution?
That's
not only a shift in personal banking.
Yeah, I would have. That's going to be probably something that was more on the retail side of the bank, and that's a fair question. And I think that the bank is going to be fairly siloed, okay? So you've got retail operations, you've got wholesale operations, which essentially is investment banking, commercial banking, corporate, all that stuff is all tied into wholesale. Those two don't actually meet until the very top.
Right.
And those business managers have the autonomy to be able to run the business the way they need to. Now, I'd be lying if I said that it's not interconnected in the sense that, what you experience, if you move the dial here, we all feel it over here, because next thing you know, I've got clients that go into the branch and they're being pushed into a cash vault or an ATM or some other scenario because of some policy the branch made. And that's challenging for me. We're trying to stay in front of it. Typically what we try to do is interact with the branches in a way that will allow our clients at least to be handled, or what we've done even more of is just automate. We just say, we'll take you out of the branch and we'll give you all the tools right on at your fingertips so you don't have to do any of this stuff. Because at the end of the day, the good side with 270,000 people is that you get to have opportunities. The bad side is that every person is an individual with their own identity and focus, and they may wake up one day at the branch and be really pissed off, and you get the brunt of that. And I can't do anything about that. I mean, I can. I mean, there's certain things, but it may be the effectiveness of the policy made at that retail level too. But yeah, there was a definite tightening, particularly amongst the retail customers. I mean, people that were able to go get car loans and home mortgages and stuff, I mean, that really contracted.
Well, I think a lot of people didn't trust banks anymore.
Yeah.
And so you see that whole customer service shift with all of them.
Yeah.
They're just like overly nice now. So, and that's kind of part of it, I think.
Yeah.
So, we'll say that we had a business, got it up and running to the point where you would be managing it, and we decide, okay, well, we have this huge problem with something in Utah, for instance. So I'm going to move to Washington State, where that's outside of your region. Would it get yanked from your portfolio, or would you be the one to maintain the contact with the person?
Good question. So we would make that based off a relationship decision. So we would sit down with you and say, how do you want to handle it? We've got bankers in Seattle. I know the bankers in Seattle, actually. We get together fairly regularly for different things. They're a good group. If you want somebody to be able to run across the street and be in your office, let's move that relationship up there. If you'd rather deal with somebody you've dealt with in the past and we've got that long-time connection, we would make that decision on a case-by-case. So, yeah, good question. Yeah.
How does that affect you if they want to keep you? Do you have to fly out there and meet them every
Yeah, you know, and I'd be lying if I said I don't have to jump on a plane fairly regularly. You know, I mean, and flights that are across the oceans are particularly taxing, especially when you're just going for one day of meetings and flying back. But yeah, you know, we will go wherever we need to go. I mean, I've met people that are in equity conferences in New York. I'll fly out just for dinner and then fly back. You know, the relationship game and that people interaction is a big part of what happens. And if I'm not there, I don't know what interaction took place between maybe another one of my business partners and my client. And being able to bridge those two pieces of information. Maybe this guy in New York who's on the bond trading desk isn't necessarily the nicest guy. I can help shelter that a little bit if I'm there. And I can be an advocate. My client trusts me. He knows that when we start talking about things and the guy starts giving him a hard sell on something he doesn't need, I can step in and say, hey, we've already been down this path. Let's not go there. Don't worry about it. So yeah, thankfully I don't have to do a ton of it. I mean, you know, the investment banking group, I mean, they're typically based in Charlotte or New York or San Francisco, and they're on planes all the time.
What do you think of my son? The goal of a father is to have a son that far exceeds what he is. And Rich is on that path.
I don't know about that.
And but I'm glad that you had the time, because I know from our conversations that you have 15 phone calls waiting for you when you get back to the office. And so I'm extremely happy that you're able to take the time to come and share that with these future entrepreneurs and career path people. This is a good group, Rich, and they are, from what I know, and I read a lot about what they write, and they all have the potential to be whatever they want to be, and that is a great thing. So thank you for coming and sharing that.
You bet.
One more hand.